Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. It is Friday, and the market's kind of sideways. That's kind of what's happening here. I've been trying to add exposure, gosh, not the kind of market I'd like, but it's still going sideways. We're still in a correction, so you got to be careful with your buys here. You really do. Costco did really, really good today, moved up tremendously. I did close my iron condor on Costco for a profit. It's a nice little thing. I'm gonna probably be showing the results of that trade here in a minute. But without, as I say, without further ado, I kind of hate that. But here we go. Basically, what's happening here is that we're seeing, we're just seeing a lot of very tough, tough sledding, because it isn't really directional. It isn't up or down, just kind of sideways. Tough market to trade in. But Costco did pop on earnings. Interestingly enough, I did buy another stock that popped on earnings, and that was Oracle. And I haven't owned Oracle in years. I mean, I haven't owned this stock forever, but I did buy it just based on the fact that it just seems like those are the stocks. I'm trying to buy some breakouts. Who knows? If you buy a breakout, you push your stop loss up. It is a way to make some money. Again, I did close the trade, the spread that we had on the spread that we had on Costco as it went up. It was an iron condor. If you've been watching the show for a while, you'll know that I have that iron condor on there, and I did take it off today. But at a nice little profit. So basically, I want to kind of go into the groups in the market that are doing the best, and also the ones that are doing the worst. But I want to look at the top 20 groups here. And right now, and I'm trying to get exposure in this group, and that is the the semiconductor fabless. This is where AMD lives. This is where NVIDIA is. This is where Rambus is. A lot of the other stocks. Unfortunately, I don't have nearly enough exposure in this area, but this is still the number one area in the market. Is the fabless the fabless semiconductor group. That's the one that's doing the best. Retail department stores are holding up very well too. That's number two, and of course that's where Macy's is. That's where Kohl's is. A lot of the other ones. I'm still trying to find entry points into those areas, because I want to get exposure in the best sectors. Now, one I did get exposure into. This was I guess this was on Tuesday. I did buy a position in Yellow, which is a trucking company, and that is the number three. Area. Now, it has come up the most in terms of in terms of in terms basically in terms. It's mainly because of the supply chain issues, but they're basically writing their ticket when it comes to cost. Now, an area that I don't have any exposure in, I'd like to get exposure in, is the insurance, the accident and casualty insurance. Now, insurance is kind of broken up into sort of two main categories. One, of course, is the A and C, the accident and casualty, and then the property insurance. Those are sort of the two major divisions. But right now, insurance is doing quite well. The accident casualty, and probably because not as many people are working from home. They're not driving as much. Their claims are down. I mean, I think Geico's printing money right now, and there you go. It's kind of one of those things. But this is the best groups. Now, groups you want to avoid. You definitely want to avoid some of these groups here. Telecom is a particularly bad one. Anything in red that you see, it's not doing as well. So that just kind of gives you kind of a look-see kind of where you want to kind of look for things. Interestingly enough, funeral services, and of course that's Service Company International, they're doing very well. So I guess I don't know, it's kind of grim, but that seems to be the case. So these are the top 40 groups. Just really for your information. The fabless semiconductor group doing very, very well, and also trucking. So those are where those are areas that I've been trying to get, that I've been trying to get in, that I've been trying to get. Now, with the overall market, we do have an interesting strategy. If the market is, and I do this for money that I typically need in 270 days or less. What I do is that when the market is in a confirmed uptrend, I'm 100% invested in the QQQ. This is the Nasdaq 100 ETF. If the market moves to uptrend under pressure, I sell half and have half in the QQQs. If it is like it is now with the market in correction, I sell all of it. Now, you will see on my list of stocks that I do have the QQQ, but I'm using that a little bit differently. I do have exposure to the Qs. They've moved up, but that is a position and not not an overall strategy for my cash accounts. But this is kind of a really interesting thing. The conditions changed on the third. That's when they pulled back into this into this marketing correction. So right now, I'm totally out of the Qs, at least in my cash accounts. I do have a position in one of my smaller accounts in the model portfolio, in the small portfolio, but that is my exposure. So this is kind of an interesting, thing that you can do that really can be interesting. Now, I want to show you several. I did buy two positions in two stocks today, and kind of want to show you that one, of course, and this is, it's awful. It did relatively well into the close. This is Denbury Resources. I still like the oil and gas area. Now, it's not number one like it was. It's about number 24. So that first slide that I showed you, it's a little bit below that, but it's still doing very, very well. We are seeing lots and lots of inflation. And of course, when there's lots of inflation, guess what goes up in value? And that is oil. So right now it's not necessarily the greatest entry point here, but I did buy a full position today of Denbury Resources. And I guess for everyone out there, a full position is if you take the value of your portfolio, you divide it by 8, one of those pizza slices is a full position, or about 12.5% of your portfolio. And the reason that you do that, of course, is because you set your stop loss 7% below where you bought it. If you do that and the stock goes down and crips that stop loss, the maximum you could lose in your entire portfolio is about 1 to 2%. So that's part of the reason that you do the position trading. So when you come into a stock, I typically will come in with 12.5% of the value of the portfolio, or one full position. So that kind of gives you an idea of sort of how that works. Of course, now I did buy Denbury, but I also bought Oracle. Oracle broke out last night on extremely good earnings. Basically, what the reason for the breakout, what triggered this breakout, was the fact that Oracle is now going to start buying back shares. Oracle is, it's been around forever and a day. It has very strong customer base. It isn't growing as fast as some of the other stocks in the group. It is number 4 currently in the database group, but it did wrap up with the news that they were going to be buying back shares. So I definitely bought a full position. I waited about 30 minutes or 45 minutes after the open to buy the shares. You don't typically, when you think a stock is going to gap up like this, you don't want to buy them in the first 30 minutes of trading, because many times you will get a pullback. So I waited the time and then bought, waiting for the pullback. My price wasn't spectacular. It was about 101 on that. But, again, definitely one to consider. Here's kind of where I'm at in terms of, these are my current holdings. I'm trying to round out the position a little bit, up a little bit on Nike. I do have a position in the QQQ, but this is in the small portfolio and not in my ready cash account. But it's up today, so maybe I should start moving back in if we get a follow through day. A follow through day on the indexes will indicate that we're in a market trend in but not in correction, that is in an uptrend. So when it moves to an uptrend, and the signal is a follow through day, and I'll talk about this if you watch the show. I will absolutely show you when that follow through day happens. We're getting very close to it. Then I will go in with my cash accounts, the ones that I need in 270 days, into the QQQ. I'm up in DHI. That's the largest home builder in the United States. DR Horton, actually, I think they're the largest in the world. Actually, they're up strongly today. There seems to be a lot of demand for housing right now, especially in the new builds. And DR Horton, of course, is one of the ones in there. There's also another stock that I haven't really talked that much about called Invitation Homes. It's also based here. It's based here in Dallas. DR Horton is based in Fort Worth. And it actually owns homes that they rent out. But I'll probably be talking about that probably in, probably next week, because I'm very interested in the model. Yellow, I'm in yellow. That is in the trucking area, and the trucking area has seen strong gains. They now have pricing power with the supply chain problems. Trucking firms, this is a good place to look for value. Trucking firms like Old Dominion Freight or Yellow or these kind of companies, very good place to look. As I mentioned before, I bought on the gap up on Oracle 30 minutes about after it opened. I'm in that position. Now, I did buy a position in Denbury. It's off just slightly, about 7 cents. I still am very bullish in the oil area because of the inflation. And I think inflation is going to be a major driver in the market. So it's kind of an area where I think we have to be, super careful. Now, I wanted to show you a, I want to show you a chart of my iron condor on um, on um, uh, on Costco. I did close this out today. The stock ended up moving up strongly on earnings. This doesn't show, this chart is the day before, but it moved up extremely strong to 560. We're at about 80% of the potential profit, and so that's kind of where I made the move to close the trade. This is a relatively short trade. I'm showing you kind of how it came in. The cost to get into this trade was $353. And let's pull back here and let's look at the recap here. We closed it for profit basically of about 304. So almost over 80% of the profit on this one when we close. So always, this is a good idea when you're doing spreads and options. If you're at 80% profitability or so, good idea to close it because they can pull back and readjust. So that's why I closed it early, because I was at 80%, and that was based on the Costco gap up. So it was looking pretty darn good in terms of that. Thanks, everybody. Let's take a look at some of the other ones. This is an interesting one Jeet has brought up here. This is an ETF. It's Builder, and I do think that this is a great way possibly to get exposure to the the overall market. Well, no, I'm sorry. This is Builders First Source. Excuse me. I thought this is the other one. I don't think it's called. Yeah, I can't remember, but there's an ETF for this. Builders First Source is looking very, very good. Let's kind of take a look at that chart for Builders First Source. This is good. I mean, building products have been a strong area. It's a weak market, but this is one of the stronger areas in the market. This is 19 out of 20. Just like the chart that I showed you at the beginning here, this is one of the strongest sectors. So this is definitely where you want to be looking for potential buys. Now, here's the issue with Builders First Source. At least on the daily chart, there really isn't an entry point. The last entry point here was a cup with handle entry at 52.72. That's kind of where the cup with handle entry was. It's beyond that. It is it is right now extended. The problem with buying an extended stock, even if it's a really good stock like this one, and this is a good stock, is that if there is a correction, and we're still not out of the woods because we're still in market and correction, this one can fall basically all the way back down to the pivot, and the pivot is 52. So this potentially could pull back very, very severely if you did buy it here. So this is why, at least in can slim trading, what I practice, we don't typically want to buy extended like this. We want to wait for a base, and the base is like this. This is this cup with handle that I'm showing you here. Basically, what happens is the stock will go up, like it's doing now, and more than likely, what's going to happen? It's going to come up, and then it's going to form some kind of base here. It may be a cup with handle, double bottom, but it will go through a basing period, typically for about 15 weeks, and then once it gets out of that basing period, then it could potentially make a move higher. That's a safer place to buy. It's not that you can't buy it here. You definitely can, because the fundamentals here are excellent. Now, what am I talking about? Fundamentals versus technicals. Well, when you're looking at the chart, that's technical. But when you're looking at the earnings, that's fundamentals. Now, fundamentals analysis, you're looking out typically a period of about 3 to 6 months. That's kind of what fundamentals really help with. With technicals, it's much closer in, typically a month out, or even a week out, basically using the weekly charts and the daily charts. So doing some fundamental analysis here with Builder's First Source, it's looking very strong. Look at this. It's up more than 20% each quarter. Very, very strong earnings. Any stock that can maintain 20% or better increase in sales is a winning stock over a long period of time. Look at how their profits have gone up too. So this is a very, very strong stock. Definitely, with a 98 relative strength. So definitely this would be an excellent one to buy. It's got 100% in terms of its checklist. So it really is checking all the boxes. The biggest issue with this stock is it's not the stock itself, it's the technicals on it. It's quite far extended from the last pivot. It's 51% above where it was 16 weeks ago, which was the last pivot. And so it's on the prior breakout, which happened on August 27th. It's basically it's basically quite far out. So if you were to buy it at this level, you might run into a situation where you could get a severe pullback. And if you get a pullback of more than about 7%, this is where the 7% rule comes in. This is where you want to exit the trade and wait until it bases and then comes back. But very, very, and I'm giving you a lot of information here, but this is a great stock. The only problem is it's extended. That's the only problem with this stock, and the market is in a trend. So, right now, BLDR is extended. Best watch list. So yeah, I mean, you definitely can. You can buy here, but be very, very careful if you do buy here, because there is a big potential it could collapse back, possibly as low as the pivot, which of course is is the pivot, but more likely back to the the 40-day line. That's this red line here. So if you're to buy it here, there's a very good likelihood that it will pull back and test this 40-day line. But if it pulls back and tests this 40-day line, that's a great place to buy it. That's an absolutely great place to buy it. As you can see, and we're looking at the weekly chart here, it's done this several times. It's come down, it's tested the 40, moved up, tested the 40, moved up, and then I think it's going to pull back, test the 40 again. And you'll notice it's moving right along that 21-day line, that 3-week line. So that's very, very important. So this is a very, very good stock. It's in a very good position. It's just extended right now. If you were to buy this, it would be difficult because it can potentially pull back to the to the 10 it could pull back to the 20 week the 10 week line. So there you go. But it's a good stock, and I definitely think you ought to watch this. And I wouldn't buy it at this level just because of what I told you, not because of the stock. The stock is excellent. It's just not in a great position strategically to buy it. You need to wait for a pullback, possibly to the 40-day line. All right, GFS Outlook. Is it a good time to buy, Harris? Thank you for that. Let's take a look at GFS. GFS. All right. Global Foundries. Boy, this is a stock I really like too. Thank you for this, Harris. Thank you for bringing this one up. I really like this stock. Part of the reason I like this stock so much has to do with political and not technical or fundamental analysis. Right now, in the world of semiconductors, TSM, Taiwan Semiconductor Manufacturing, is by far the number one fab in the world with some of the highest technology. They make essentially the chips for NVIDIA, AMD, all the other ones. But the problem is much of their capacity is in Taiwan. And if you've been following the news, you know that Taiwan may be in danger of having an invasion from mainland China. But we don't know. I mean, obviously, that's total speculation on my part. But the supply chain for chips is moving away from Taiwan. And, of course, TSM is building plants in Austin, Texas, and in Arizona, Chandler, Arizona, next to the Intel facilities, but it still doesn't have the capacity. The interesting thing about Global Foundries is a conglomerate is basically the old foundries of AMD and other companies. AMD used to produce all of its own chips. They went to outsourcing to TSM, but I think some of that's going to come back on shore. So Global Foundries is, I mean, yes, it's technically a startup, but it's extremely well funded. It's got business, and it's a very, very good company. The question is, where can we buy it? This is totally on my watch list. I really like this stock. I just haven't bought it yet, just because of, just because of the situation. So, looking at the fundamental analysis here on Global Foundries, we have some nice numbers coming in. We have some very nice numbers coming in with sales. Sales, are basically starting to show this 20% quarter over quarter growth, which is what we want to see. This quarter, we had some very nice earnings come in, over 100% up. So this is starting to make profit. It's for the year, it's not profitable yet, but next year it will go profitable. They spend about almost 10% of their of their income on R&D. So that's excellent. They have a fair amount of debt, 32%, but remember, debt is low right now, cheap right now. So fundamentally, this is looking fairly good. On the technicals, it came out of this IPO at 47 back here at the end of October. It hasn't seasoned yet. We've gone through basically 1-2 months. We really need to wait until about the end of February to buy this one. So here's the thing. I really want to see 3 months. I really want to see 3 months on this one. So, wait for another month and watch list right now. But this is likely to be a great buy in the near future. And part of the thing is that, as we all know, I mean, chips run the world. Chips run the world, and this is going to be significant capacity for production of chips. They already have a full order book, but it's only been an IPO for 2 months. It needs time. I would watch this one out. Definitely keep this on your radar. This is a very, very good stock. definitely keep this one on your radar, but I wouldn't buy it right now. It's just not set up right. We want to wait for the best setups that we can get, and then go in and buy them. But very, very good. Thanks for that question, Harris. Very much. It's one of my favorite companies. I'm not in it yet, but it's just mainly because of the situation. I want to get it, 3 months or more. I want to see how it does this next quarter. I think it's going to do very, very well, but I don't want to jump the gun. I want to be patient, wait for the right entry on it. Now with Apple, if you bought it back at the pivot, and this is why buying on the pivot is such a great idea. If you bought it on the pivot, you can see right here at 153, that the pivot basically was at the end of November. That was the correct place to buy it. Okay. Right now, unfortunately, it's extended. It's way above that pivot. So if we look at how that's trading, we have a situation where it is unfortunately it's unfortunately 17% above away from the pivot. And here's the rule typically in stocks. After the pivot, if a stock has run up this much, if it runs up to 20%, you want to start selling it. You want to sell it to strength. So right now we're almost at a profit. We're almost at a sell point. Now, can you buy it again? Absolutely. Now, if you're in the stock, if you're in Apple right now, this is essentially where you want to be selling it as it moves above this 20% range. Now, should you sell it all? No, don't sell it all. But if it moves over 20%, you want to sell half your position, keep half your position, keep some of that house money, that good house money. But right now, it's run up, as you can see, very, 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 very quickly. It is currently extended. So right now, the stock is extended. Not that it's a bad stock. Again, it's a great stock. It's performing excellently, but the appropriate time would have been to buy it at the pivot 153.18 up here to about 5% above to about 160. That would have been the appropriate time to buy it because it wasn't too far extended. Currently, it's very far extended, and you can see this by looking at this little pink line here. That's what they call the 10-day line. Okay, you see how far above that 10-day line is? What's going to happen is it's going to adjust back down to that 10-day line. And then if it adjusts down a little bit, then you might be able to get into the buy zone once again. But my advice, if you're holding this and you've held it and you did buy it at the proper buy point, is that once it reaches that 20, you want to start lightening up your position, taking your profit, taking your profit there. So you can see that's the profit zone. So that's kind of my take on it. If you're in the stock, don't sell it. Wait, but push that stop loss up. Keep squeeze the toothpaste tube. Get the money there because that it is a tremendous stock. If it moves above 20%, that's where you want to start taking off some of your position. Now, at this point, it's not a good place to buy it. Why? Because it's extended. So basically, the situation with Apple right now is Apple is extended. Wait for a better entry point. So that's really, that's really the thing. Again, it's all about entering it properly. Um, it's all about entering the stock correctly. It's extended right now, and it's extended because it's well above the buy range. The buy range typically is from the pivot up 5%. It's this level here. We're very far extended until it can get support, and it should get support, but it's going to probably come up to 20%, and then it's going to form one of these. It's going to kind of pull back, and it's going to get support in what they call a base pattern, and that's what this is. So I wouldn't buy it at this point, but if I was holding it, push my stop loss up. If it moves up to about to about if it moves up to about the 183, 194 level, you might want to consider taking some off because that is the 20% sell zone, and that's a good place to take off exposure. All right, so let's look at TikTok. Thank you very much. I'm trying to see if we can get some questions. I bought January. Okay, so this is calls. Let's see. Okay, and what do you think about Moderna puts? Well, that's a good question because Moderna. I don't know if you've been following this, but Moderna may have a problem with a patent violation, and they may owe, believe it or not, they may owe they may owe NIH, National Institutes of Health, a patent fee because it looks as if they may have inadvertently used some of their patents. So without paying licenses, not a good thing to do. You want to always you want to always pay those licenses on things that are patented. So they have some issues potentially coming up. So let's look at the chart for Moderna and kind of see, kind of take a look and see if we can, we can find anything there. We definitely pulled below the 200-day moving average. This is not a good sign. This is really, I don't think this is really an optimal place to short it yet, but we're possibly getting there. We're possibly getting to a point where it might be shortable. Right now, we do have the beginnings of a shorting pattern. That's the head and shoulders. This is the left shoulder. This is the head, and this is potentially the right shoulder. So this is kind of the formation that we want to see. But here's the thing: what has to happen is when you get this formation, there needs to be a rally, typically up to the 200-day line. That's where you would short it. Oops, I went to the wrong one. I went back. So let's look at mRNA. And there we go. Okay, so is it acceptable to put in puts right now? I would kind of wait for a better pattern. You could do that. You definitely could do puts on Moderna, but I would be a little bit careful. Here's what I would recommend, and I'm going to actually put this down: a bear put spread. Okay, and the reason I like these better than just doing put is because you have some protection. If you're wrong and there's a gap up, if there is a blow off top because of people covering their shorts, you're protected in that you can only lose as much as the spread. So I would, if you're thinking about doing puts, don't do naked puts. Try to do a put spread. Try to do a put spread with about a $10 spread on it. And I might be talking about this more. I'm going to do a little bit of research and see if there is a potential for doing that on Moderna, because Moderna probably is overvalued. They probably are going to run into some problems. So it's a potentially good candidate for this. And we are still in a market that is in correction. But remember, it's very, very tough when you're shorting. You don't want to be being short in something in a market in correction is good, but if it moves to a market in an uptrend, it could be very difficult. So be careful is all I'm trying to say. Oh, let's look at snow. This is really a great, I have not been able to figure this one out. I was in this pretty soon after the IPO, and I just didn't buy it right. But I do think that this one is so well invested in terms of the big boys. They're so big into this. Now, this is a typical IPO kind of thing. Now let's do some fundamental analysis on snow first, because I think that's really important here. And that is, we've had tremendous sales growth. Look at that. It's up over 20% every quarter. That's excellent. We're still not profitable, though, because it is a growth company. So that is a little bit concerning. 39% of the people are in this are funds, but we still have a negative cash flow. So what has happened here? When the IPO came out at 120, people came in, and then it caught on, and then we had our first cup with handle buy point, and our first pivot was at 301, which is basically 300. Now currently we are a little bit above that. We're at 370. There was a test here and a pullback. Obviously, the ideal time would have been to buy it. Would have been about right here, about on Tuesday, when we tested at about 300. That was the buy point. We were in the range at that point. Now it's a little bit. It's a little bit up. We want to see if it can hold that 40-day line, but you possibly could start buying here. I wouldn't be buying strongly. It does have a good checklist though. 78% on that checklist. It is still not profitable though. That is a problem. Right now, it's up 23% from the last pivot at 301, as we were talking about here. So here's what I would do. Right now, it's extended. Right now, snow is extended. And the reason it's extended is because the last pivot was at 301, and we're up 23%. We want to buy that within 5% of that pivot. So here's what I would do with snow. I would be I would not buy this one at this time, but I would watch this. Wait to see if it moves closer. Wait to see if it moves closer to the. Oops. Wait to see if it moves closer to the pivot, and then possibly buy it. But right now, I don't think we can buy it. So, snow right now is extended about 23% from the 301 buy point. So I would watch list and wait. That's kind of how I would take. That's kind of how I would do it. But it is a good stock. I mean, it definitely is. It definitely is a good stock. But I think what we want to do is we want to wait to see if we're getting another test on this 40-day line. If we get another test on the 40-day line, and we get down here closer to 300, within, if we get in within about, if we get in with about from 300 to about 315. That's where we could buy it if we get another pullback. I don't know if we will, because it looks like it tested there. So I would just be careful about this. Right now it's extended. I think we need to wait on this one. Let's see how it's going to act. If it builds another base pattern, then we can buy it. But right now, I think we just have to be super careful. This is a tough market to buy in. You got to be a little bit careful. Just wanted to show you one that I bought, and I just want to look in on it. So kind of give you an idea on buying. I don't know if this was a particularly good buy or not, but let me look at how. Yeah. Okay. So did it show? Is it? Sometimes these arrows don't show up, but I'll show you. I'll show you this. Basically, this is a buy that I made on yellow. Basically, this week, as it moved above, and I made it as it moved above that mark. But as you can see, it pulled back. So there's resistance there. There's a resistance. I bought at 11.99, which is basic. I'm sorry. I bought at 12.71, which is just slightly below this. See, just slightly below that. As it was testing this 14.79 resistance. Now, of course, there's resistance there, and it pulled back. So even though I think that was a relatively good buy, I could have been better. It could have been that could have been much better of a buy. I just wanted to get exposure into the trucking area because it's so good. But it was an okay buy, but not a great buy on any stretch of imagination. Thank you, Mike. Hi, Jim. Any update on Ford? I really liked it. I bought it the last time you mentioned it. It went up 10% today. Okay. Thank you. Thank you for buying it. Ford is a great company. A lot of companies are looking, they're looking hard. Let me see. Let me see if I can Let me just do this because I want to just see if I can make a. There we go. Just kind of make that messy. Okay. Just want to take a picture of that. Thank you very much, Mike. I so appreciate it. Ford is a good company that has, that people have said, well, it's Ford and it's old and it's 120 years old and, why am I buying this thing? But, they have this really good uh, program right now. The Mach-E did really well. You know, everybody's been saying it's all the Mach-E. Well, I don't think that's the case. I think with Ford, they're going to be very, very strong in these light duty trucks. And I think there's just a tremendous market for that. Here's what I would do if I was in Ford. Right now, I probably would be looking, depending on it, if you want to hold it long term or you want to trade it. We're above the, we're above the 20% buys, the 20% profit zone. So we might want to consider, depending on how it reacts this week, moving our stop losses up here, because I think that you should sell half your position. Basically, the rule is you should sell half your position when you achieve a 20% profit. So, but just don't go out and sell it. Just don't just go out and push button and sell it. Don't do that. Move your stop loss up. Um, you know, basically move your stop loss up. And what I'm going to say on that is that, move it to maybe, at least to 21. Okay. If you do that with half of your shares, don't sell all of them. With half your sales, set a stop loss 100 at basically about 20, 21 or 20, right in there, so that you're getting into this profit zone. Then set a secondary stop loss down here at about on the 40-day line, which the 40-day line in this case for Ford right now is at about 1780. So set a secondary at 1780. So set that there. Why do you want to do that? Well, what you want to do is that as the stock is peaking, and it is peaking right now, and if it pushes, and I may be all wet if it pushes beyond this, but you want to start taking some of your profits off and playing with house money as it goes up to 20%. So that's why you have this first stop loss, which has about 50% of your shares there. Your second stop loss, of course, is to protect your capital very close to where you probably bought it at the top of the buy range. So I would set 2 stop losses. That's how I would handle it. You definitely want to. This is a good stock. You can play this volatility, and I think you can really make some money in Ford. I don't think we've seen the last of it. I think it's going higher, and I think it's a lot better company right now in terms of the legacy companies, the legacy automobile companies, than GM or any of the other ones. Tesla is good, but Tesla's been pulling back as of late. Tesla's still a great company. I'm not giving up on it. It's just now sort of starting to base again. So you got to go with that. But thank you for that comment, Frank. Thank you for that kind comment. We definitely talked a little bit about Ford, so let's look at BTI and check that one out. Right. British American Tobacco. Boy, you know what? This is one of the all-time great dividend stocks. This has been around. I think this is one of the oldest companies on the stock market. I don't know exactly the history of this thing, but this has been a winner for 400 years. I mean, I don't know if they've been around that long, but they've been around an awful long time. My only concerns about, there's several concerns about this. This is a dividend aristocrat. I'm pretty sure that this is a dividend aristocrat. This just pays out money like an ATM. Okay, the return on equity on this is stellar. It is 12%. There are very, very few companies out there. The Altria, which is Philip Morris, that's in the same category. There's very, very few companies out there where you're going to get a 12% return. And even though, smoking is bad for you, smoking is very profitable, and there's a lot of money in this business. and this company has market share. So if you're looking just for a dividend play, this is tremendous. Look at this, $5.21 cash flow. Now, obviously, their dividends aren't going to be that high, but $5.21 on a $36 stock. That is a incredible that's an incredible price to earnings ratio of about 7. In the last 5 years, it's gone from about 6 to 21. So this is absolutely, if you can get around the fact that they sell cigarettes, which are incredibly bad for you, if you can get around that fact, this is a winner. Now, is it buyable? That's the question. Can we buy this one, and do we want to buy this one? So let's kind of take a look at the checklist. The checklist is not that great. Firms are just not acquiring this one, partially because of the stigma behind this one. The problem is they're very, very far off. They're very, very far off on their accumulation by funds. Nobody wants them. They're sort of their relative strength is less than 80. It's a 37, and it's not in a very big. Tobacco is one of the worst groups out there. Nobody's investing in these companies, but the people that own these shares are milking them for all they're worth, because these are the cash cows of the cash cows. Now, I would not buy this right now. Why? Because it's in a downward trend. Okay, the trend is downward, and it's below the 200-day line. Now, the question is, can you look? Is there anywhere in the future that you would potentially consider buying? Well, it definitely has moved above the trend. It has definitely moved above the trend, but right now I would say no. I would not buy this one. I would wait a little bit until we see a little bit more, until we see it move above the 200-day line. This is really my line in the sand. I want to buy it only if it's moving above the 200-day line. So here's what I would say on British American Tobacco. I would say not a buy right now. But it has great dividends. And if you're looking for a stock, if you're looking for a stock to hold forever and not trade, because I'm primarily a trader, I trade stocks as they move up. If you're looking for a stock that you want just to hold, for years and years and years, and just get dividends on, there are very few stocks that are this good. But as a trading stock, it's not good. It's not a good trading stock. So you have to make a decision. If you're willing to hold it for a year, I would say that this might be a really, really good buy. If you're going to trade it 30, 60, 90 days, like I normally do, I probably wouldn't buy it. But a great question, and very, very, very good pick there, because it's kind of it's a special stock that that could do very, very well. All right, let's check in. Thank you, Brian. Let's check in on onsemi. onsemi is a company that, unlike NVIDIA and the other ones, they actually make their own semiconductors. Now, they're more in the industrial semiconductors, but they've just been doing great as of late. And let's take a look at their chart. Semiconductor manufacturing is 9 out of 197, so it's definitely someplace that you want to get exposure to. Of course, TSM is in there, and of course we have Global Foundries is in there as well. But onsemi is also a fab, and they are very good. The biggest issue right now is we've had all this movement up, which is tremendous, but we just don't have a good place to buy it. There's not a good buy point on this. Unfortunately, we were extended. The last time we had a buy point on this was at consolidation at 44.59, which is considerably less than where it is now. So what I mean by extended is, by the way, it has 100% checklist. So you're definitely looking at the right in the right areas. My only real concern here is the correct buying it correctly so that if there's a pullback, you don't get whacked on this one. We're up 48%, no, 46%, excuse me, from the pivot in 19 weeks. Typically, we're well beyond the profit zone. If we were up this much, typically, I would have sold at 50%, at 20% above the buy zone, and then I probably would consider selling another half. So I would be, if I had 100 shares at the buy point on this one, I probably would only have 25 shares right now. But we are extended. We're extended. That doesn't mean that we can't wait for it, but we need to wait. And I think that right now it's just one of those things. It's sort of like a train. You got to kind of. I wouldn't buy it now. You could definitely buy it here. It's got cash flow. This is a pumping company. This isn't on the fundamentals. It looks very very strong. I mean look at these numbers. They're excellent. They're just excellent. My only concern is that we're at the beginning of a base period probably, and I think we got to wait a little bit more time for it to base out. So I do think it's going to probably stall here within this range, and then it's going to form a base pattern, and then as it comes out of the base pattern, it probably is going to be a better buy. But right now, it's extended, and I think you got to be super careful on this. The stock is extended, so I would not be a buyer because it is extended. So the stock is extended. On is extended. Great stock, but need a better place to buy. So yeah, this is. I mean, that's my really only my really concern here is that it's extended. It just needs a little bit better place to buy, but it's great stock. I mean, you definitely could go in on this stock, but what I would do is I would go in with smaller positions, maybe half positions. I would set my stop losses very, very tight because this stock, at least right now, it's vulnerable to a pullback. It's vulnerable to a pullback. Oh, thank you also for this, Brian. ASO is looking very good as well. I agree with you totally on ASO. And that is in a buy zone. So this is viable, as you can see. This one is viable. So this is kind of where look at that. Beautiful, beautiful pattern. Cup with handle, pullback to the 40-day line. This is a great place to buy this, by the way. This is a great place to buy this because you've got base on base action. That's what this is called. You've got this cup. You've got the cup with handle. This is the buy point here. The buy point is right here at about 43. It's at 46. It's pulled down. It's tested the 40-day line. It's come up and is right in the buy zone. So this one, Brian, is viable right as we speak. So, Academy Sports and Outdoors is viable right now. I want to put those in caps because, I think it's, I think that's just, this is definitely really looking fine. So I'm going to put this down on my list as a possible buying candidate for me. And it looks very, very good. I mean, it's at 3% off of the pivot in 27 days. So it's right at the pivot. That's good. We've got an excellent checklist, 78%. On the pattern recognition, we are in a stage 1. That's the best stage. And on the technical analysis, it's up 7% today. This is the earnings. It did very, very well out of earnings. And the weekly monthly is excellent. Year to date, this is up 122%. Of course, we're almost at the end of the year, but boy, I tell you, if you put all your money, if you put all your eggs in the basket in January, that would have been a friggin' home run. I've got to do that in the future. But thank you for bringing that up, Brian. Appreciate it. That's a great stock. It is viable at this absolute moment. Great. Sold my PayPal share at 190. Okay. Oh goodness. Up to 7% drop loss triggered. Yeah. Okay. Okay. Good. I'm so glad that you did this. I am so glad that you did this. Why is this so important? Now, you may not like having to sell when you get a stop loss triggered like this. You may not like having to sell like that, but boy, this can really help you. Now, you sold at 190, so let's look at PayPal, um, and let's kind of look. We may be able to get back in at 180, but here's the thing: I would not buy PayPal right now. Wait, and I know this is tough. Wait until we move above this 200-day line. That's the key right there. Wait until we move. It's going to bottom. It's going to show some strength, and it's probably going to start moving up, but it's got to confirm an uptrend. And right now, we're still in this downward trend. You don't want to catch that falling knife. You see, we have a falling knife action there, so not where we want to be. This was the prior uptrend, and then you see where it broke, and then it's down. It's gonna settle, but it's probably, I think, it's below this pivot here. The next pivot, unfortunately, is probably way down here at about 103. So this could pull back. This could pull back easily to about the 103 level. So I would not be in it. So you know, um, you know, you know, it has rallied a little bit, and this is the tough thing. After you've triggered a stop loss like this, you think, oh my goodness, it's rallying. But look at what happened. It rallied up to the 21-day, then, and it was rejected, and it's moving down. So it may fall, and it looks as if it may fall down below that too. So there was a little bit of an uptick at the end, but I think that you just got to wait until we see an uptrend before, because you can this this can go lower, and it probably is going to go lower, at least for the time being. All right. Thank you for that, by the way. This is probably getting close to the end of the hour. Let's look at AMD. This is also on my watch list too. I'm trying to find a way to buy this one again. I'm trying to find the good entry. It's tough on AMD to find this. Let me I have a lot of notations on this, so let me just kind of turn off some of those notations. Let me just turn those off. Yeah, there we go. So this kind of gives a better viewpoint on it. We're still in we're still in this downward trend. So what I would do is I'm going to set an alert on this one. I would not buy this. I would not buy this right at this level. What I would do, let's see if I can get it to glow. There we go. Oops, glow, and then set the alert. Okay, so this is an alert on the line. This is a reversal line. Here's what I want to have happen. I want to see this move above this 21-day line. This is this green line. And if it does, then I'm probably a buyer of it, because I think it's going to get support at this level. As we talking before, you can see as it comes out of the base and then it moves up 20%, that's where you want to start selling, right here. And then as you can see, it moved beyond that. And then the way you sell here is you don't just sell it. You push your stop loss up, and then eventually it breaks, and it's going to pull back down. And now it's starting to get some support. This is creating what they call a base pattern. The last time it did this was back here. This is a double bottom base pattern. That's probably what's going to happen here, but we're in the early stages of it, as you can see. So if this gets support and it reverses above that line, that's a possible alternate entry there. I would not do anything until that happens, because right now we're still in a downtrend, but I do think we're going to see it move above that line. And then if it does, then I think we have something that we could really use. So what I'm going to do here is I'm going to set that trend line alert, and I'm going to set, this is the reversal of the AMD downtrend. Consider entry. So that's going to kind of give us, that's going to flash an alert to my text. That's going to text me an alert if it comes into the. By the way, that's one of the great features of MarketSmith. There's other software that does that, but one of the features I like is the trend line in Market Smith that if it crosses that trend line, then we can get an alert sent directly to text, which is very helpful for me because I can see it on my phone. All right, thank you. Let's look at Win. Hey, cool. WEN. Let's look at Win. All right. And Wendy's, a place that I have been far too many times. Always good. The Baconator is excellent. If you haven't had Wendy's, Baconator. I've had way too many of those Baconators. Do like them. Good choice. It's a fairly inexpensive stock. It's pulled off a little bit in and after hours. What's happening here? Well, it's below. It's trading below that 200-day line. I don't like that. Seeing that. It's also in an area, retail restaurants, that's not as good. But here's one of the good things about Wendy's in particular. Wendy's is a drive-through machine, and so if COVID comes back, their business is doing better. But here's kind of the deal. Unfortunately, we had this spike here, and if we draw this trend line, we're just barely above. I'm gonna set the alert on that trend line. We're just barely above that reversal. Okay, so we are above the reversal. So it's starting to turn. But as you can see, right at the 200-day line, it's getting resistance. So unfortunately, I don't think we can buy Wendy's at this point. I would like to see that happen, but I want to see a reversal, and I want to see the trend move up. Also, the relative strength is not that good, 52. I'd like to see a lot higher than that. So if you're looking at the checklist, not a good checklist, unfortunately, for Wendy's. So here's what I would do with Wendy's. And again, I'm just showing what I would do. So don't take everything I say with a grain of salt. But I would watch list. I would just watch list Wendy's for now. It's not a buy. So that's kind of how I would look at it. Watch this Wendy's for now. It's really not a buy, and it's just one of those things. Well, thanks everybody. We're basically in an hour, so I'm going to sign off for the Friday, but hopefully everyone will come back on hopefully everybody is going to come back on Monday at 3:45. It seems like that's working out better for me because I can actually get my charts done at the end of the day for more of Dallas Trading Floor. And if you're on the Action Trade Alerts, this is our free site. We send out alerts. I'm probably going to be sending out a watch list. Hopefully, if I can get it out. I said that I was going to do that yesterday. I didn't get all to do it. We want to be building a watch list. I'm going to give you probably a very extensive watch list that you can take a look at, and I'm going to try to mark the ones that are at the best, I would say, potential pivots on it. So, but in order to get that, you got to go to www.Dallas Trading Floor. Also, if you're looking on TikTok, very easy to do that. Just go to my profile, click on the link, first and last name, get on the list, because you can do very, very well if you are on the list. And I'm not no guarantees or anything, but this watch list has been nicely scrubbed, and it does contain some winners. So that's going to go out tonight. And until tonight, what I need to have you do a few more things. I really, really need you to like the content. Like the content. I guess you get a bigger one than that, can I? Yeah, like me on YouTube, please. I need to get out to more people. And also, remember about the Action Trade Alerts. But until Monday at 3:45, I will be back then. Happy trading, everybody. You stay safe, and we're going to make some money as the market is going to turn. I have a feeling the market's going to turn up this week, and when it does, we want to jump right back into the market. Right now, I'm mostly in cash, but if the market turns, then I will be jumping back into the market with both fists. So hopefully we'll have a little bit of a Santa Claus rally towards the end of the year. That's kind of like what I'm expecting to happen maybe next week. So till then, happy trading.